Hello everybody. So today I want to briefly discuss the falling energy stocks, and by energy stocks I mean EV and energy storage stocks, and really how quickly they have fallen because of the overhang of Tesla and because of a SolarEdge guidance downgrade. And we are really seeing amazing bargains on my favorite stocks, stocks that I cover extensively on the channel. The stocks that deal with the revolution that we're headed into in the world of energy and this transition to everything electric. This is what these stocks do. They are well anchored within a secular trend, a multi-decade long trend. And today, thanks to the market's short-termism, we are getting wonderful deals. So let me begin. I have updated my valuations for these 4 stocks that I will be looking to buy next week. And let me just give you a brief commentary. Tesla is dirt cheap. Now, I know what many of you are going to say. Why am I using 50% revenue growth for Tesla? Because Tesla has maintained its long-term guidance. It's both written down and discussed in the call. They still have a 50% long-term CAGR on the delivery of vehicles. And in my view, that should translate to revenue growth roughly plus or minus 5%. And I know the deal right now on the internet, everybody says, Tesla may only grow 37, 40% next year. Big deal. That's not the long term. The long term is they are sticking to their guidance at 50%. So I'm sticking to this number in the spreadsheet. I'm sticking the 50% in the spreadsheet here. I'm leaving this number. And we're getting to a cheap stock, right? Not as cheap as what we had in December at the beginning of the year, but a cheap stock. And everything's fine. If you forget about the tone and the depressed mood that many commentators are saying about Elon Musk, which to me, he wasn't that depressed in the call. He laughed multiple times in that call. I listened to it again, actually, especially as I'm looking to increase my position to much more. It's already more than a third, but I'm looking to increase. So I'm really studying this. And, they're sticking with the guidance. We've had the great news. Let's not forget that there was a chance that we were going to get Cybertruck in November. There was a chance. No, we got a date for Cybertruck, November 30th, right? There was a non-nil chance. There was, maybe a 15% chance we weren't going to get Cybertruck this year. We're getting it this year, as they've announced, right? And the Model 2, there's been a lot of talk about the commentary that Elon said that we're not in a hurry to open Giga Mexico, and this was interpreted by the internet and by Twitter as the Model 2 is not coming. But let's not forget that this comment about Model 2 was within the context of a conversation about how they have a lot of room to grow at Giga Texas, a lot of room to grow at Giga Texas. Model 2 is coming, and we know from the biography as well, and we know from some rumors in May that they've already had this intention to start Model 2 in Austin because they have a hard time finding engineers, or they anticipate having a hard time finding engineers in Monterrey, Mexico, or at least moving their engineers there. So we've known this for a while. So this market reaction to me is entirely unwarranted. The stock is down 16% in 5 days. It's really 2 days if you really look at it. And to me, there's very little reason. And yesterday, I made a long video. Yeah, I'm sorry, almost an hour and a half. I made a long video about, my views on Tesla and my grand vision and why this is my number one stock and why this is the Apple of this decade. This is the Apple of our era. This is the Disney, the IBM of our era. That's what Tesla is, in my view. And, if you want to hear more about my views on Tesla, I recommend you watch this video. I know it's a very long video at an hour and 21 minutes, but I'm really trying to cover things that I have not covered on Tesla before on this channel because I don't cover it much on the channel because everybody else covers Tesla. And frankly, I regret making this video on Tesla, by the way, because when I see my number of views on this video, I have next to no views actually compared to other shorter videos. Why is that? Because when you make a video on Tesla, all of the views are given to the bigger YouTube channels, which is fine. Tesla is a very crowded stock to discuss. But I made this video mostly for myself, and you know, if you like my style of commenting on stocks, I really recommend you watch it, and it's all my views about where Tesla is headed right there. Now, let's move on to another stock that's gotten dirt cheap, you know, and it came on my radar today with a minus 8% on Friday. This stock, in my view, is STEM, right? STEM Inc. that I've covered multiple times on the channel. It's fallen back under a 1 billion enterprise value, fallen 12% in 5 days. And the only explanation, given that they haven't reported anything yet, the only explanation that I can come up for why STEM is down is that it is falling in sympathy with Tesla. Oh, Tesla earnings bad. Therefore, STEM must be bad. But when you look under the hood, and when you go into the operational summary of the Tesla Q3, like I did, you can see that this is not this is a little harder to understand. Like, it's easy to understand why Enphase and SolarEdge are down. If you look at solar for Tesla, clearly Tesla is way down year over year, so that's easy to understand. And everybody was expecting a downturn in solar. But when you look at STEM, the mega packs, right? Storage deployed, that's the mega packs for Tesla. That's up 90% year over year. Who is the leading or one of the leading installers of Tesla mega packs? That is right. That is Enphase. The number one, Enphase, what am I talking about? STEM, that is STEM. The number one product that STEM installs is the Tesla Megapack. Tesla is the first supplier of STEM. STEM is a fully integrated installer and provider of software for battery energy systems that mimic peaker plants or that allow industrial sites to have backup energy. And the number one product that they install is the Tesla Megapack, along with Chinese options. And they have a lot of Chinese options and Chinese supply. This is doing very well. I do not understand. This falling of sympathy is not looking under the hood. And I will be looking, I have a very meaningless position in STEM. I'll be looking at maybe starting a more meaningful position in STEM now that the stock is trading at $3. And we'll see over the next few days if it trades even lower than $3. I mean, it's possible. The stock is entirely being ignored. Look at this number. This number closely matches the number of Tesla. So the revenue growth predicted for STEM is 86%, right? Look at the number of Tesla. Year-over-year growth is 90% for Megapacks. So 90% Megapacks, and the leading installer of these packs, STEM, is growing at 86%. This is a very similar growth number. So the markets makes no sense. And that's probably because there's a 30% short ratio on STEM. That's probably one of the big reasons, as to why this is happening. But let me move on to other stocks, which are Enphase and SolarEdge. And so a stock like Enphase or a stock like SolarEdge, to buy it, you have to be comfortable with knowing that this stock is going to go down. And I've made multiple videos and saying, if it goes to 100, I'll buy it at 100. And next thing you know, Friday afternoon, I was buying it at $98. So I was very happy about that, right? Entirely unwarranted fall. The thing that I think we all have to understand about Enphase is that it wouldn't have been possible. When I was buying Enphase at 130, 120, and even earlier than that, when I was buying Enphase at 170, it was impossible to know where Enphase was headed. This is not a short-term game. The game of investing is a long-term game. I am holding Enphase past the 2030s. Right? And I don't want to get into this game of selling the stock and buying it back, right? Because I don't own Enphase in a tax-advantaged account. I'm paying my full taxes on Enphase stock. I much more believe in owning the stock all the way up and just going through the roller coaster. And I understand that some people want to wait for the stock to hit 100. Now that it's 100, a lot of people are saying this is going to be $70. Well, A, you don't know if Enphase is going to go to $70, but then B, when it goes to $70, everybody's going to tell you Enphase is going to $30. And then at that point, will you buy Enphase at $70? At some point, you have to buy it. At one point, you have to buy the stock. You have to buy the stock and buy it at the price that you're given by Mr. Market at some point, right? And my view on this is that if you want to build a meaningful position, you have to be okay with a higher cost basis, Otherwise, you're never going to have a meaningful position, right? You may scalp, you may have a tiny position from when it hit your target, right? Your target buys, you preset them in your order book, and you may be lucky and it spikes down to like $70, and then you get, 50 shares filled. But then you don't have a big position, right? To me, this is about position sizing. Which is why I'm very fine with Enphase. If Enphase goes to $70, I'll buy it at 70. But I don't know. I'm not sure. I know I like the price right now. And Enphase is falling in sympathy with SolarEdge. Minus 20% in 5 days. That's pretty rough. That's big sympathy right there. But there is a little bit of a difference. Let's not forget that not only Enphase guided down and was very open about guiding down earlier on, so we don't know how much of a delta there's going to be between the actual numbers and how much they guided down, right? That's point number one. And then point number two, the business of Enphase still mostly tilts towards the USA. Like, it's still a mostly USA business. Let's not forget that SolarEdge, right, is seeing this slowdown a lot in Europe. I mean, who knows? Maybe the slowdown we're seeing in SolarEdge is because of Enphase being the shiny new product in all of these new European markets, right? As far as I'm concerned, the last time I looked at Enphase, they were doing outstanding in Europe, in countries like France, for example. Outstanding is the new hot product on the market. So I think this is very kind of Enphase to be sympathetic with SolarEdge. This is especially kind of Enphase to be this sympathetic to SolarEdge because there is a major buyback, right? There is $1 billion buyback at Enphase, and I sure hope that the CFO is giving some orders, asking for some buybacks right now, because this is the ideal time to do their buyback, even though I generally don't like buyback too much. Plus, anyways, they are releasing amazing products right now, Enphase. Amazing products, amazing reviews. They're investing in advertising. There's a lot of good things going on for Enphase. But anyways, it doesn't matter. These short-term fluctuations don't matter. To me, this is a bargain. If you have a long-term view, right, and if you think in 2030 solar will be 10 times bigger than it is today, which is what I think, then to me it's a great buy. Let's not forget that, it's a top 5 S&P 500 stock, Enphase, as far as total returns. Well, not as much now because of what happened over the past 6 months, but before it was ranking right next to Tesla. And this stock will bounce back. As soon as the inventory clears, this stock will bounce back. The market is really looking quarter to quarter, and now you have distributors who have high inventory, so if you're looking at this decline, but this is not accurate, right? This is distributors getting rid of their equipment. But at some point, there's going to be a refill that's needed of this equipment. Anyways, and the last stock I want to talk about is SolarEdge. And I mean, this is pretty ridiculous to me. There's no other way around it. So SolarEdge is a bigger business in Europe. That's A, and then B, SolarEdge as a quickly growing commercial focus, and so I think it'd be interesting to look when they report, to look at the dynamics of the distributors between the commercial product and the residential product. But anyways, the problem is the distributors, they shipped too much to the distributors before because they were expecting that outstanding growth. Now the distributors have all of this stock, and now they're seeing normalization by Q1 of 2024, which means that Q1 2024, that'd be what, 5 months? That's an eternity for Mr. Market. 5 months, sell the stock, minus 30%. That's an eternity to look 5 months out. I own this stock. It's a tiny position for me, much tinier than Enphase. But I'm adding to the position right now. I mean, this valuation has gotten ridiculous. So they've guided down their guidance, right? 725 million midpoint, and they had said 885 million. So what a 10-ish, 15-ish% decline in guidance compared to what they had guided. and compared to what an analyst had said. But even if you were to take the bad guidance that they're given, the reason why the stock is down 30% is that guidance, by the way, and you do an instant rate, which means that the instant revenue rate is you take this number, you assume it's going to be the same the whole year, so you multiply it by 4. You're at $2.9 billion in sales, in revenue, instant right now, like taking a picture of the business right now. And the business right now is trading at 3.94 billion. So you have a stock that is trading at 1.35x times sales, which is unheard of for a stock who has had returns trailing Enphase by a little bit, but very outstanding return, top 10 returns in the S&P 500. And this is absurd, even if the gross margins for this quarter dropped to 20%, which is what they said in the press release, that the gross margin this quarter may be between 20-ish and 21%-ish gross margins. Like, that's still an insane valuation for a business whose market will grow tremendously. In my view, we're going to go to a world where in the US about 5% of roofs have solar to 80% of roofs have solar. And in Europe, right now, about 10% of roofs have solar. And we're going to move from 10% of roofs that have solar to also 80% of roofs that have solar. And Australia still has tripling to go, right? Australia is about 30%. It will triple that to the high 80s, the low 90s, because it is the cheapest source of electricity. And I really believe in this, and I must be at, over 10 hours. Who am I kidding? Well over 10 hours of content discussing all of the intricacies of solar and, entering all of these debates of central inverters versus micro inverters. We're debating, we're talking about all these technical differences. But the market is not trading these stocks on technical differences. Mr. Market is entirely making movements of the stocks that make very, very little sense, right? Like the technical difference between a SolarEdge or an Enphase, over the long term, do I believe it's going to be 5%, say, compounded annual return over 10 years of a difference over the long term? Yes, in fact, that's very close to what it has been. That's the technical difference. But Mr. Market is granting you differences in yearly return in the 30% for these stocks, and it's just selling these stocks indiscriminately regardless of the technology. I believe in both technologies. Yes, I prefer Enphase over SolarEdge, but not for the commercial space. For the commercial space, I believe SolarEdge as a very solid product. They make sense. Their products, string inverters, make sense in the commercial space, in my view. So anyways, this is not a debate about this. These stocks are dirt cheap, right? At a 0.14 in my spreadsheet here, that is dirt cheap. So anyways, I hope you enjoyed the video. This was not investment advice. This is just entertainment, of course. Please like, please subscribe. Thanks so much for watching, and have a wonderful, wonderful day.